So you said it, Lata, it's not as good as the TCS's or the Infosys, but all in all, it's better than what we were expecting. So I'll go through the numbers one by one. On the top line, in rupee terms, there's been a growth of around 5.5%. So it's come in at around 9,777 crore rupees. PAT is in fact up by 5.9%. So the bottom line is the only little bit of a negative. We were expecting a fat growth of around 8% on PAT. So we were expecting around 1,820 crore rupees on a PAT level, and it's coming at 1,783 crore rupees. Largely, PAT was expected to be aided by a gain in terms of forex versus a loss that we've seen last quarter. So that's a little bit of a negative. But if you look at the dollar revenue growth, as you said, it's a growth of 3.2% to be precise. So dollar revenues have come in at $1,538 million. Revenue growth in constant currency terms is 2.9%.
Okay, 1 minute, Kritika, if you can hold on, we're just getting a few more numbers.
Okay, with me.
Yeah, EBIT number is?
EBIT number is 1976, for the quarter.
That's quite a disappointment, isn't it?
Yeah, 1976 is the number, and which means that there is no growth in terms of EBIT margin which has come. And I think it's a disappointment clearly, because the EBIT margin comes around 20.2%, okay, if you look at it. And I think the market was expecting EBIT margin to go up to 21.86.
Yeah, and almost 22 was expected, and you're saying it's coming in at 20%.
Yeah. 1976 is the number which I have with me in terms of EBIT. So clearly it's a disappointment in terms of the EBIT margin, which has come down to 20.2%. So I don't think that
20.1, there you are. Exactly. The EBIT margin coming in at 20.1 against a poll which is almost 185 basis points higher. And remember, so that would count as a disappointment, as has the profit. So this is an operational level problem? Revenue is not disappointed, but you're spending more money to get that.
Exactly. We got to see one more thing, what they have done into the IMS business. Because as I said, HCL Technologies was the company, where easily, the company reported EBIT margin of anywhere between 23 to 24%. People was hoping that, that the management guided, at least since last 4 quarters, that they will be maintaining EBIT margin between 21 to 22%. Exactly. And that was because of the new investments what the company has been doing. Remember last quarter...
I just want to get one more point on board. In the press release, they're talking about the geography segments, the breakup, and the rest of the world business has actually fallen 0.1% quarter on quarter this time versus a growth of 10% that we've seen last quarter. So in the geography-wise business, America as well, America growth is fine, 5.1%. Europe has slowed down to 0.1% growth. And the rest of the world business, the emerging market business, has degrown by about 0.1%. So that will not go down well with the street. Let's just get one analyst in. Dipesh Mehta, IT analyst at SBI Cap Securities, joins us now. Dipesh, there seems to be a disappointment in the operational performance, and some of the geographies also have slowed down quite a bit. What would your initial take be on the HCL Tech numbers? Dipesh, is my voice reaching you?
I suggest you continue with what you're getting from the press release. We'll just wrap up what we've got so far. The revenue at 977 crores is up 5.5%. That's come in line with expectations. The profit at 1783, which is up 6%. That's disappointed because the street expected 8%. Margins at 20.2 has disappointed. 20.1 actually has disappointed. 185 basis points lower than what the poll was throwing up, and EBIT clearly lower at 1976. Expectations was 2134. Varinder?
2 things, okay. One is the infrastructure services business, I think, which is one thing what everyone tracks. It's again seen a growth of 5.2%, and that is totally in line by 4 to 5% growth. Okay. Important point, if you just analyze all big IT companies, 20.2% is the lowest EBIT margin if you have to compare TCS, Infosys, Wipro, Tech Mahindra, anyone, okay? So 20.
So margins is an issue.
It's clearly an issue.
Yeah, I'll just toss to Deepesh and Deepan. 2 guests are joining us. Deepesh, your first thoughts you were telling us?
Yeah, I think revenue-wise performance is broadly in line, but I think margin is where the disappointment came. We expected margin to be sequentially better, but I think margin has clearly disappointed.
Okay. Deepan, your first thoughts? Deepan, can you hear me?
Yeah.
Can you give me your first thoughts on the results? I don't think Deepan can hear us. We'll just get back to him in just a bit. Deepesh, with what you have heard on the margins, what is your comment going to be?
I missed your question. Can you repeat it?
No, given that the margins have disappointed you by about 200 basis points, were you expecting 22 and you have got 20% in terms of EBIT margins? And what will your comment be, therefore, on the stock? Are you likely to see a sell-off today? What will be your own price target?
We have a target price of 970 hold rating. I think stock is likely to remain under pressure because of the margin thing. But I think important to watch is what they say about margin and other detail, because I have yet not got chance to look at results in detail.
Okay. Varinder?
I'm also disappointed with the engineering and R&D services business. If you just see, that has only seen a growth of 1.9%. This is the business, if you just map out the last 4 quarters, quarter 1, FY 15, it grew at 8.1%, quarter 2, 12.6%, quarter 3, 4.6%, and it has now come at only 1.5%. So from a growth of 8%, 12%, 4.5%, engineering and R&D business again has seen only a growth of 1.5%. That's not a good sign. Also, as I was mentioning about infrastructure services, it's now getting very lumpy. From 9 to 10% growth rate, it is coming to 4 to 5%. The only thing is this company now has been investing a lot. What our channel checks also just suggest us. Also, if you look at the valuations of HCL Technologies, and compare with any other firm,
We've just got the attrition in the IT services business that's come in a little higher than previously. I mean, this is probably just splitting hairs, but 16.2 has become 16.5. It's not a great deal. That would be normally flat. Utilization has definitely increased to 83.5 from 81.9. So that's a good 150 basis point increase in the amount of usage, capacity utilization. That's a positive. So at these levels, actually, it is showing a fairly stable picture, improvement in capacity utilization of your labor force, attrition more or less maintained. But there are clearly problems with the output of the engineering services as well as the infrastructure sectors where the growth has not been very strong. It's more than growth. I mean, actually at the growth level, it's not a number that is disappointed. What is clearly disappointed is their ability to achieve it with lesser money. So it is as much an operations-led issue and less of a revenue-led issue, because on revenue they've actually delivered.
If you just see the consolidated income statement, clearly shows that that the direct cost for the company is going really, really high. And that is why you're not seeing the performance coming on EBIT and PAT. For direct cost, if you just see, it has gone up from 964 million to 1012 quarter-on-quarter basis, which means that it has grown more than the growth in sales itself. So that is why it is not percolating down. As I said, the company is investing a lot, which is what happened in the last quarter as well. And that is why the numbers are not trickling down in terms of the numbers. I really don't see now outperformance from HCL Technologies. The stock was up 4.5% on Friday. Okay. You will see profit booking happening in. Look at the valuations of HCL Technologies compared with all other IT companies. Is trading around 18 times FY 16.
Yeah, I agree.
Which is in line with Infosys. Infosys is at the same level. What
and
HCL
actually,
Technologies
it's not even delivered margins like Wipro has, so there will be an issue on that.
Wipro margins were 21%.
Should we go across to Dipan Mehta? He's waiting by as well. So let's get one quick comment from him. Dipan, hi, morning. The numbers from HCL Tech look disappointing on the operational front for sure. How do you expect the stock to react today?
No, I think that certainly the stock will correct on opening, but the disappointment on the margin front is something which I think the management will eventually clarify. But this is the same story with all the large cap IT companies where costs are going up at about 10, 12, 15% or thereabout, and the volume growth is becoming a challenge for them. And even if there is a slow growth in any one geography or vertical, then it's not getting covered by better growth rates in other geographies or other verticals. So these are challenging times for the IT companies, and large cap IT by and large, I think with the exception of maybe Infosys, certainly have disappointed. And maybe the high growth that we are used to in companies like TCS and HCL Tech, that high growth phase seems to have come to an end, at least what appears from the last 2 quarters.
But will their valuations be under challenge, Deepan? Because, while one understands that margins are under pressure for everybody, this company lost about 250 basis points in margins even last quarter. This quarter, it's a further 185 basis point fall in margins. I mean, consolidated, it's almost a 5 percentage point fall in just 2 quarters. And in terms of valuations, actually they're getting valuations which are better than Wipro. Do you think that now there is at least going to be a near-term challenge to HCL Tech's valuations unless the company is able to convince that they are investing so much that margins are going to improve shortly?
Yeah, I think what the management has to, comment on the margins will play a role. But, HCL Tech has been, if you go back last 4 or 5 years, HCL Tech has been a star performer. I mean, its growth has been equal to and sometimes higher than TCS also, which is why investors have re-rated the price earning multiple for HCL Tech higher than at some point of time than Wipro and Infosys as well, because of just the track record of the company per se and delivering results which are better than industry aggregates. So that's one aspect. And maybe a couple of quarters may not be enough to de-rate the price earning multiple, but if this is going to be the trend going forward where the company underperforms the industry and its peer group, then certainly investors will try and take the PE multiples on the lower side. One aspect of the operating profit margins could be the cost pressures and the pricing pressure, more than the cost, the pricing pressure, because we have seen in the other large cap IT companies that there has been some pricing pressure and decline as far as the billing rates or the yields are concerned for their clients. So that could be one line of questioning for the management.
In fact, if you look at the geography-wise breakup, Dipan, there's been quite a disappointment in the Europe geography as well. The growth has been only 0.1% versus 4.5% last quarter, and the rest of the world geography has actually degrown by about 0.1% versus a 10% growth last quarter. How concerned would you be about some of these pockets?
I think he's unable to hear us. Okay, so that's the story really. It's a margin disappointment, and for the tall valuations that the company has, this would be a bit of a bother. The revenues at the top line are in line with expectations, but individual sectors like infrastructure or engineering are going to pose problems. Client addition, there's one client in the 40 million bracket that has been added that we have been flashing for you. Let's go to Kritika. Kritika is just getting those papers from the management. She's at the HCL Tech premises. Kritika, anything more that you have spotted and we have missed?
So client additions, as you said, okay, so there's one client that's been added in the $100 million category, 5 clients in the $40 million category, and what they're saying is that the $40 million category has seen some kind of increase in momentum in terms of large deal signing, and the $40 million category addition has come in into engineering and R&D services. A couple of more client win details that they've talked about. They've added about 10 clients in the $10 million category and about 24 clients in the $5 million category. But as you can see, all in all, in terms of quarterly deal win, it's not as significant as most quarters. We've seen their quarterly deal wins crossing around $1 billion on a Q-on-Q basis. We've in fact seen usually it comes in at $150 to $200 million plus client additions. So this time client addition is decent, but not as significant as the last couple of quarters. That's a little bit of a disappointment over there. Yes, the infrastructure revenue, as Varinder was saying, not as great, but yes, it's up by about 5.2%. So Street can take a little bit of a heart from that. But engineering services down, engineering services up by just 1.9% is flattish. But the management had kind of indicated last particular quarter that it will be slightly sluggish. In the next 2 to 3 quarters, we should see some kind of an uptick. So, of course, that's one question to pose to the management. They've announced a 5 rupee dividend per share, which is again 50th consecutive quarter. But all in all, infra services has crossed $2 billion revenue. So, the base is growing, hence the 5% is okay at that. Any other details that you don't have?
Okay. No, Kritika, I think I'll go over to Varinder to give us a wrap of what the earnings looks like. We will have to move on to the other stocks as well. I was talking to someone yesterday and they were asking me that whether the 21 to 22% is the new normal for HCL Technologies, because, as you said, coming down from 24 to 25%. Now, the big worry will be, it's not even 21 to 22% in EBIT margin. I think the biggest disappointment or the biggest takeaway is the EBIT margin disappointment clearly. And that comes because of the cost moving higher. Total income, as I said, was up 3%. Look at the direct cost. They have gone up by 5% quarter on quarter. SG&A has gone up 3.7% quarter on quarter. And that is where the hit is coming.
coming clearly, you know.
Absolutely. And we thought last quarter was a one-off. Now it's become 2 quarters in a row that expenses have gone up, hiring has gone up, but it's not showing up in revenues just yet.
It's not a good sign. From
So
25%
initially we are going to see a tick down on the stock.
Clearly, you know, from 25% to 20% EBIT margin, it's not something people are expecting from HCL Technologies as a company. And as you said, at a taller valuation, the way, you know, the stock is trading right now.
Fair enough. We will revisit this issue, of course, after the market opens, Varinder, and I'm sure you'll have a lot more analysis by then. Now let's shift focus to the broader markets itself. Sudarshan Sukhani joins us. Sudarshan, good morning, and thank you very much for your patience. The numbers came in just as we were about to invite you. Let's